Good afternoon. Welcome back to the Daily Squeeze. Brian Farr here, VP of Stock Analytics with Stock Dads. Today is Thursday, January the 4th. As we near the conclusion of the first week of the year, another busy session today. Markets mainly closed mixed, with primarily the Dow Jones closing green. Most sectors closed red on the day. But yeah, wild one today, starting off with some economic data with the ADP employment change. We also had Walgreens earnings and a dividend cut on Walgreens. We also got another downgrade on Apple, this time by Piper Sandler today. So lots to uncover and unravel. Yields again higher, closing at 3.99%. Nearing 4% yet again. Bitcoin up about 3.5% on the day, a decent bounce there. But overall, the mega cap weakness continues with semiconductors. So yeah, let's get into it. This is your Daily Squeeze. All right, let's start off by talking about the major economic data today. Again, we had some more jobs data, and we also get more jobs data tomorrow, which is going to be a pretty important market mover. We have the non-farm payrolls and the unemployment rate tomorrow. So just go ahead and get that in your head that is going to be a big ticket item for the morning session. Those will be coming in right at 9:30. 9:30 for the non-farm payrolls, and the unemployment rate will also be coming in at the same time at 9:30 a.m. right at market open. So how about that? But yeah, let's talk about the big ticket item today as far as the economic data. Today we had the ADP employment change. The ADP added added 164 workers in December, which was higher than the downwardly revised 101,000 in November, but also beat the forecast. The big hotspots last month in December was the leisure and hospitality sector, which added 59,000 jobs. Followed by education and health services, which added 42,000 jobs. The main weak sector that we keep seeing is job losses in manufacturing, which lost 13,000 jobs, and information services, which lost 2,000 jobs. So a pretty interesting labor market that is pretty much heading back or aligned with pre-pandemic hiring. Wages didn't drive about of inflation, and pay growth has retreated some. So we are looking at a pretty interesting jobs growth scenario, and especially going into the ADP non-farm payrolls tomorrow. So we also had our weekly jobless claims that came in at 202,000 versus the 216,000. So again, a very strong report there from the jobless claims. But all right, that is the economic data. Let's go ahead and jump into some charts here. First of all, let's go ahead and start out by looking over Walgreens Boots. They reported their earnings today, and the big picture, to take away from this is that Walgreens did cut their dividend by about 50%. Now, Walgreens did close off of its lows there. We can see that the price action did bounce off pretty spot on with the daily 50 SMA, but still down 5% on the day. But yeah, big story here with Walgreens Boots, pretty much, making the cardinal sin, especially as far as dividend investing goes, by cutting that dividend by 50%. Now, why the reason? Well, they need to cut costs. Walgreens has been burning cash like no other. In 2017, they had $12 billion in cash flows, and now this past quarter, they only have about 739 million. So they are burning through some cash. They do have a new CEO that was appointed in October, and he's going to have his hands cut out for him. No doubt about that. Especially, they're probably going to have to restructure, maybe close down some stores that aren't doing so well. But just in general, the cash flow and the margins aren't looking good at all, and cutting the dividend could bolster its cash flow a little bit. But yeah, there's going to be plenty of work to do there. Now, let's get into the other big story today, and that is Apple, which, again, another downgrade today, this time by Piper. Yesterday we had the downgrade by Barclays, or that was Tuesday, I believe. We had a downgrade by Barclays. Now we're getting another downgrade here, this time by Piper Sandler. Basically, they are concerned about its inventories and its iPhone sales. They do believe that its growth rates have peaked, and the other concerns include deteriorating macro environments in China, which is believed to be Apple's higher end iPhone business. Now, what is amazing to look at this chart is, we hit a high of 199.62, a brand new all-time high on Apple, and we pretty much went from overbought to oversold now, which is kind of a rare ticket item for Apple to become oversold. So maybe anticipating a bounce, but if you can also see here on the chart, this red line, that is the 200 simple moving average. So, could be an interesting opportunity here. But, we do understand that there is maybe some uneasiness here by investors as far as, Apple goes. So definitely want to keep an eye on Apple. It's not often that Apple does become oversold, but, that is just one key component here. Just because something is oversold or overbought doesn't mean it has to reverse from there. So, definitely just going to keep an eye on it. Definitely some overall weakness here in Apple. And if you compare that to NVIDIA, which, I'm still holding a position that I am down on just because theta decay is starting to really eat at it. NVIDIA has been holding up pretty substantially well here, trading above its 50 simple moving average. And despite the overall market weakness, NVIDIA hasn't really budged a whole lot. Now, I would like to see this push above that 505.50 level into fresh new all-time highs. And we know that once NVIDIA starts to accelerate, then she can very well push on ahead. So definitely keeping an eye on NVIDIA, especially since, we've seen some weakness overall in semiconductors, and, MU had an upgrade today as well by Piper. So, even with that upgrade, MU did kind of fall to the downside a little bit. So pretty interesting stuff out there. But yeah, tomorrow we got not only we got the NF non-farm payrolls coming in tomorrow, but a lot of key investors are going to start looking into the inflation data, which comes in tomorrow, not tomorrow, next week. We got CPI and PPI next week. So all eyes are going to be on that. We'll see if that has any kind of impact on the Fed funds futures, on, rate cut decisions and stuff like that. So a lot to really keep an eye on. But looking at the SPX closing down 0.34%. We did have a little bit of a sell-off there at the end, closing right on its daily 21. So we've had this mean reversion after, such a big move, this past month in December. So a little bit of a cool down, some consolidation. Not really too concerned with it just yet, but I understand that investors are probably, sitting a little uneasy with this pullback here. So, we'll see if we get any follow through to the downside, but the Dow Jones has been relatively strong over these past few days. As we can see, the Dow Jones, relatively strong. We've seen healthcare names being well behaved, as well as financial names. And speaking of financial names, Burke B had a nice move to the upside again today. JP Morgan, fresh all-time highs there at 173.35. And yeah, healthcare too continues to push on ahead. XLV making the high at 140. You got names like Merck, who continues to push on ahead. Let's see, Johnny John also had a pretty interesting day. Cooled down for the most part. But yeah, even Lilly, which was a name that we talked about earlier this week, had a fresh all-time high. Closed back into the range, but we'll see if she can pick its feet back up and push on ahead. We did have better market breadth today, even though rates did close at that 3.99 level. Market breadth stocks pretty much hung in there despite these higher yields. So, yeah, we are going to anticipate some movement tomorrow with that ADP non-farm payrolls and the unemployment numbers. But yeah, that is going to be the expected driver. And we are expecting those numbers to come in at 170K and the unemployment rate to be at 3.8%. So if we get some good numbers there, maybe the rates will fall off. And yeah, we'll see what happens there. But for now, rates have just had a decent little bounce here off oversold conditions and back up to that 4%. Now, obviously, if we get back up all the way to 5%, that's going to be a big problem there. And the Fed will have to monitor and all that kind of stuff. But as of right now, 4% is a big psychological level. We'll see if there's continuation tomorrow, and especially going into next week with the inflation data. But all right, let's get into some of these charts here, starting with the daily watch list. First of all, let's start out by looking at PSX. Remember, I said keep an eye on PSX and MPC. PSX did push on ahead to that 786 target at about 137.72. So congrats, any longs there. We took the 130 calls all the way to $8 from 5.6. That is a 43% net gain in PSX. We're also paying attention to PDD, which is also still a pretty valid setup here. It didn't get going today, but if it gets above this 150.66 level, then I am looking for a push all the way up to about 154.12. One key concern here is that there is a slight RSI negative divergence here where price has made a higher high and RSI has not made a higher high. In fact, it's made a lower high. So could be an issue there, of course, but we'll see how it continues to hold up. And Apple today was on our watch list, but she gapped down. We were looking at puts below 183.43 with that target down there at the daily 200, which sits at about that 180 level. So that's going to be a pretty interesting spot. Like I said, Apple's in this very unique position where it's oversold. It doesn't happen too often, as you can see on this daily chart. So keep an eye on that. Another player in the watch list was ticker symbol DKS, Dix. This gap down, unfortunately, but still holding that 136.50 zone. And then, of course, Burke B, the 365 call we took to $7 from $4.55, or a 54% move. This still looks pretty good. It's still in a daily squeeze, so definitely want to keep paying attention to Berkshire. As far as setups goes, yep, keep an eye on PDD, but an interesting one right now is Bank of America. Now, Bank of America had a pretty solid push to get things going today. It looked like it was going to clear this $34 mark. We can see that we have this nice overhead resistance here at 34. If Bank of America can push above this, then you do have room to about 34.50 and then 35. Not too much room, but can still, if you play options correctly, you could catch a nice move out there. Just be aware that earnings are coming up on the 12th. And yeah, so you don't want to, unless you have some kind of reason to be in it during earnings, and all power to you. But yeah, let's see here. And Lilly, we talked about. We also talked about PDD. Those are also looking good. But yeah, once again, bank earnings starting next week. You got inflation data. It's going to be a big week next week, so it should be fun. As far as the day trades go today we took SPY, the 468 call, from $1.62 all the way up to $2.90 for a 79% gain. I need to fix my charts to where I can bring in my intraday charts here. Let me see here. Bear with me here. All right, SPY, here we go. All right, so yeah, we took those SPY calls pretty much from the lows here all the way up to the highs. It was actually a pretty fantastic trade here. We went with in the money contracts just to take advantage of the Delta move here. We also had Tesla. We took a small hit on, not a small hit, but we took a small base hit, excuse me. As far as Tesla goes, we took the 242.50 call all the way up to from 235 to 260. So that's the 242.5 call from 235 all the way up to 260, or about 11% gain. Nothing too crazy. Basically, we played the opening range breakout all the way up to this fib extension target at 242.70. So a pretty nice little win there as far as that goes. And then the biggest win today came from, believe it or not, an SPX call. We took that from $2.20 all the way up to $5, or 127% on that. We took that at about 11 o'clock and ran that up here, this big pop here off the consolidation at about 47.18, and took advantage of that all the way up to 47.25, 26. And yeah, nice little pop there for 127%. Can't complain. We also had put credit spreads. Both myself and Lady Leverage were able to snag about 60% off of those put credit spreads. So overall, a very, very nice green day in particular. And yeah, this market continues to be pretty darn interesting. Like I said, Bitcoin up about 3.5%. Speaking of Bitcoin, I did take a small swing here on MSTR, took the 700 call. This is going to be a high risk, high reward situation where if Bitcoin continues to push on ahead during the overnight session, then we are set up for that to take advantage of it. So keep your eyes on Bitcoin during the overnight session. We'll see what happens there. But overall, the Dow Jones continues to be the strong old man of the group, it seems, and we'll see what the end of the week has in store for us, and we will see you in the next one. Take care. Have a good one.